It's classic big money always in place before the crowd catches on. And so when you realize that the central banks know the playbook, when you realize that the most powerful central bank, the central banker's central bank, the BIS, reclassified it as the world's only other tier one reserve asset, that should tell you all you need to know. And so the people, again, who that 0.5%, the pimple on the elephant's ass, amount to nothing. And if indeed the public wakes up and says, I just need 5% of my assets in gold, that's a tenfold increase in demand. And they're like that, it'll be gone.
Andy, thank you so much for coming back on, man.
Danny, good to be here, brother. I appreciate you having me. And crazy days, man. Things are spinning a little faster than normal these days, it seems. So good to ride shotgun with you and chat about it. Appreciate you having me back.
Yeah, lots of news to dig into. The last show we did was much acclaimed. People loved your insights, Andy. So I'm sure everyone else is excited to see you back on. So let's just dive right into it. CPI came out down to 3.3%. 3.4% was the number for April. And it seems to be driven by lowering gas prices. Now, we all know how they can lower gas prices, right? Through the SPR, et cetera. So what does this lowered CPI portend? Is this really an indication of anything? Can we really trust the CPI? What's kind of your take there, Andy?
Well, no, I mean, first of all, the CPI comes out of the BLS. You could take the L out of the BLS and just have it BS. The Bureau of Labor Statistics, and first of all, they're showing month over month, right? And so if we look at the BLS first and foremost, they strip away things that are inflating. Like they in April took out coffee, which was up 80% from a year ago, 30 or 40% this year, and replace it with something that like tea that's not as inflating as much. They strip out food, energy, and housing. There's a website called shadowstats.com by a man named John Williams, and all he does is show the way the numbers used to be, the way they would be today if measured against the way inflation was listed, in 1980, 1990, before they made all of these changes to fit their inflationary agenda. And John would tell us inflation's running 11 or 12%. And when we look at this month over month change in inflation, running at 3.5% or whatever annualized, what people I think are missing is take a step back and go look at the way that the inflation was running 2 years ago, 3 years ago, before the big jump in COVID spending. And it's like this, and then just like this, and now it's leveling off a little bit. But the real inflation is what has happened over the last couple of years. And so, yeah, it might be stabilizing a little bit, but it's funny to see how reactionary the market is, assuming this means that the Fed will start to lower rates as inflation is coming down. And so gold jumps and all of these assets jump in respect to the Fed pivoting supposedly. But it's just a bunch of nonsense, to be honest with you. Inflation isn't going anywhere. Inflation is still way higher than it was a few years ago. It might just be a little bit softer than it was last month, as an example. But, look, we're still over 50% above its target of 2%. So why would they pivot and lower rates when you're still a full 50% above the target in a metric that is being really manipulated and is not really indicative of the level of inflation? So I don't know. I'm not a big believer in anything that comes out of the Bureau of Labor Statistics, whether it be the unemployment numbers or the inflation numbers. And quite frankly, when you talk about all of the money that's been created, the $6 trillion in a year, or the amount of money printed in the last 3 years being more than all the money printed combined leading up to this, preceding the last 3 years. But who's going to pay for all these entitlement programs that we have? Medicare, Medicaid, Social Security, government, military pensions are $175 trillion. Medicare Part B is $99 trillion alone. Medicare Part D, the prescription, 22. Social Security, $77 trillion underfunded. A trillion seconds ago, Danny, was 31,688 years ago. So, strip all this BS out of the, the BLS and the numbers that they give us and the way they change it and massage it, and just ask yourself, who the hell is going to pay for all of these obligations that we have that aren't even part of the $34 trillion debt? And ask yourself, is inflation going to go away? And if we lower rates, like, gold shooting up here in anticipation of the Fed saying, well, we'll lower rates in the second half of the year here because inflation's coming under control, which it really isn't. But if you think about the lunacy of this, it does not take into account all of the liabilities that we have to somehow pay for. Who's going to pay for it? And if we lower rates, what it signals to the rest of the world, those that have been buying our treasuries, and many of these countries that have been buying our treasuries have been selling the treasuries over the last year. Japan, China, Saudi, Russia, all of these countries are shedding treasuries, and it has less to do with the return that they're offering, and more to do with the weaponization of the treasury market and the realization that if you're on the wrong side ideologically of the West, that, well, your assets can be frozen and in some cases even stolen, like they're doing now with the Russian assets, and even used against you, your assets taken, stolen, and liquidated and turned into weapons to fight a war against yourselves. These are steps that are once you cross that line, you don't come back from. So by lowering rates, we are signaling to the world that we will never normalize our balance sheet, that we will always choose inflation over austerity. And by masking the real inflationary numbers, it just gives them the ability to keep the charade going longer and longer and longer. So to me, it's a bunch of nonsense, not only in the lack of authenticity in the numbers that we are given, but in the market's stupid reaction to this reactionary type of reactionary in the respect of not looking at the big picture, just looking at the immediacy of this type of monetary and fiscal policy that's I guess you could say disingenuous at best. So yeah, not a big fan of it at all. And quite frankly, I think inflation is here to stay and is not getting better in the long run and will not go away, because if we do, that signals that we will end up basically defaulting on our obligations.
So Andy, what do you make of Jay Powell coming on stage and saying that we do not expect to see more than one rate cut this year? They plan to hold rates steady. Is this just posturing to stop the markets from going parabolic, to stop the gold and silver price from going insane? What do you make of this posturing from the Fed?
Well, they're trapped, Danny. They're trapped, brother. I mean, they started out the year by saying there'll be 4 rate cuts, and then 2, and then maybe 1, and then maybe even raise rates. But now there might be 1 rate cut. Anything that comes out of the Bureau of Labor, anything comes out of the Fed has been a lie. Go all the way back to Bernanke when he told us the subprime crisis was contained, and then poof, it blows up. Everything they've told us about inflation, first there was none, and then it was transitory, and then it was structural, but then it was under control. And I mean, everything they have told us has not been true, nor has their policies that have been reactionary at best done anything to fix it. I mean, look, I can't imagine that they ultimately have any desire to lower rates. Quite to the contrary, they should have continued to raise rates, to normalize things, and to get things under control. And in fact, they haven't. What they did is they raised them 500 basis points in a very short period of time, putting distress in the marketplace. But this is a situation where the suppression of interest rates for all of these years and the easy money that they threw on top of it has created massive distortions in asset prices and put them in a very tough position. If they lower rates, they have signaled to the world, again, that they will never get their balance sheet in order. They will never normalize it. They will always choose inflation over austerity, simply because they know that if rates get much above 5% on the 10-year treasury, it blows everything up. So you raise rates, you blow things up. You lower rates, ultimately that leads to higher inflation and higher rates as the rest of the world who is buying our treasuries has to make a decision. Do you want to continue to own the debt of a country that has signaled that they can't get their balance sheet in order, that they will continue to lower rates and be accommodative, which will only lead to more inflation, which will only lead to devaluation of the dollar, and not to mention a country that has chosen to weaponize the treasury market. This is not good. And I think Powell is damned if he does and damned if he doesn't. What else is he going to say? And everything he has said hasn't come to fruition. In fact, they've had to back away from the things that they've said and say, well, now maybe we'll do one rate cut. Who knows? There was going to be 4 for sure. And you even get some of the Fed governors, like the Fed governor from Minnesota says we should be raising rates. So I guess we'll see how it all plays out. I wouldn't put much stock at all in anything that comes out of Fed Chairman Powell's mouth. He's trapped, and he's trying the best he can to posture. Absolutely.
I had Alistair McLeod on the show not too long ago, and he basically conjured up the scenario where Russia could create their own gold standard, a gold-backed ruble. Now, what he says that this would effectively destroy the dollar. Number one, do you think that would be the case? And number two, what exactly is stopping Russia from pegging their currency to gold, or even China, let's say, or like any assortment of these BRICS countries from getting together? We've talked about the BRICS currency in our last interview. Certainly, gold will be a factor in that currency. But what's stopping a China or a Russia from saying, "Hey, back off, United States. We can peg our currency to gold and completely demolish your dollar"?
Well, ultimately, I mean, they don't even really need to do that to do that. What I mean by that is that if you take a look at what has been happening since last August, when the last BRICS meeting happened in Johannesburg, was that the deal was that they would make trades in local currencies. All of these countries would trade with one another in their local currencies, meaning, Russia is trading with India and it's back and forth between rupee and ruble. Now, Saudi Arabia is selling their oil to China for a yuan. Let's back up a minute. The Russian finance minister, Sergei Glaziev, for the last 3 years has told us that they will issue a common settlement currency, and it will be backed by a basket of commodities and a basket of local currencies. We assume gold will be the primary commodity in this basket, as the BIS, the Bank of International Settlements, reclassified it, as we said last week, only other tier 1 reserve asset, which is a big deal because for 70 plus years, it was just dollars and treasuries. And now the most powerful bank in the world levies gold to a tier 1 status. And this, to me, explains why the central banks are buying it at levels the world has never seen. But what these countries have been instructed to do until the common settlement currency materializes, and this common settlement currency, they have to have enough mass of countries that want to be part of the new BRICS group. And right now, we have found out in the last meeting that 59 nations plan on joining the BRICS, right? You're talking the majority of human population. And when that happens, things will change. But until then, what they are doing is trading in local currencies. As an example, Brazil and Saudi Arabia. Brazil is trading with Russia, with Saudi Arabia, with China. They are using, for example, with China right now, they are selling their coins, their corn and their soybeans for yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. So they're not settling in dollars, first and foremost. And the settling in yuan or in real or in rupee or in ruble, any of these currencies, chips away at the settlement status of the dollar. But what they are also doing at the same time, you see, part of the petrodollar deal, and most of these countries have done something similar, even outside of oil, as it pertains to all of their excess reserves, was that you would sell in dollars and then take the excess reserves and put them in U.S. treasuries. Well, these countries, as we have said, have been selling treasuries and replacing it with what? gold, which is the only other tier one reserve asset next to treasuries. So that chips away at the settlement status, or the reserve status of the dollar, rather, the settlement status in the trade, the reserve status in the excess going into gold instead of treasuries. And so what you see happening, in essence, is the settlement status of the dollar beginning to be chipped away as all of these countries are now settling in local currencies. But instead of putting the excess into US treasuries, it's going into gold, which is keeping the price of gold high and moving higher, and keeping interest rates higher in the US Treasury market, as all of these countries which used to buy our treasuries, which would lower rates and strengthen the bond market, are in fact selling treasuries and replacing it with gold. And so, as it is right now, there are 10 countries in the BRICS group. And in order for it to be a situation where you have mass usage, where it would really start to blow up the US dollar and have it pegged to gold, which ultimately I think it will be pegged to gold. There's no other reason that the most powerful bank in the world, the BIS, would have reclassified gold as the world's only other tier one reserve asset. And no other reason why the central banks would be buying it at the levels that they have been. But I think what is going to happen with the BRICS currency, to me, more logically, would be that these countries will all have this multipolar world where they strengthen their own local economies and local currencies. But if you have, as I mentioned, 59 nations in BRICS instead of 10, well, if you have a BRICS settlement currency, or a common currency that has gold tied to it, and these countries have been buying gold like it's going out of style, you don't have to have it immediately pegged to gold right now and trying to disrupt things. But when you have 59 countries and you maintain your own local economies, but the settlement currency is backed by gold, you can now settle in the new BRICS currency and go shopping in 59 different countries. Maybe you want to buy, machine parts from one country and oil from another country and wheat from this country, and use the BRICS common currency, which will be, I believe, pegged to gold to some degree, and blockchain technology, the two combined. But in the meantime, until that's fortified, and you have to have enough countries in place in order to do that, because if you only have 10 countries to choose from, to trade from, you're limited in what you can do. And you may not want to hold rupee. You may not want to hold ruble. Maybe you do, maybe you don't. But if you have a common settlement currency, you can trade with all of these countries, especially if it's gold backed. It gives it even greater strength. But until then, look at what China is doing. They sell their oil, or Saudi Arabia rather, they sell their oil to China for yuan, the digital yuan, which is immediately convertible into gold in the Shanghai Gold Exchange. So they're immediately settling in yuan and then putting the excess reserves, excess reserves, into gold, which is a tier one asset. You chip away at the reserve status, you chip away at the settlement status. So ultimately, yes, gold will be tied to a new system. But by pegging you could argue in some respects, these currencies are already kind of hedging towards a gold pegging with the way the system is set up. But to actually peg it to gold and try and be a reserve currency or a global settlement currency is foolhardy. But it isn't if you have 59 countries together in a new currency that is pegged to gold using distributed ledger technology. And in the meantime, you strengthen these unions, you strengthen the economies, you weaken the dollar, you weaken the treasury by trading in local currencies and putting excess reserves into gold instead of treasuries. So ultimately, you will see a gold backing of a settlement currency, but I think it'll be a BRICS settlement currency, but not until the cross section of humanity is large enough. And you put all of these countries together that have formally and informally applied, along with the Belt Road Initiative, which we talked about last week, and the Eurasian Economic Union and the Shanghai Cooperation Organization, which I've been saying for 3 years will join the BRICS. And the president of Belarus has just called for a formal summit to bring these countries into the BRICS fold. You're talking 85% of human population, and the majority of all of the rare earth metals, the majority of all the commodities from precious metals to wheat and soybeans. You're talking something that should not be underestimated. But what I respect about these countries in this union is how methodical and regimented they are in building what will be a force to be reckoned with, and not firing that bullet before it's time to do so. So ultimately, Alistair is right, but I think it has even greater significance if done in a unified currency rather than one like the yuan or one like the ruble, who may not have the global appeal the way that a mass united common currency would, in that being in the BRICS.
Yeah, interesting. If you guys want to see that interview with Alistair, be sure to check it out. It was quite the interview there. Let's go ahead and stay on the topic of China. China came out with news that they had ceased their gold buying. This sent the price of gold coming crashing down. I think it was down about $60 or $70 on the day. This was back on Friday. What do you make of that? Is that simply an issue with China not being able to find the quantity of gold that they need, that they simply can't buy any gold? What's the story there?
And I don't know if China came out with that or not. I mean, I look at this as one of the most premature conclusions that I've ever seen. These are the same people who will openly tell you that China has not been forthright in telling us how much gold they've accumulated and how much they own. This is a situation where China is the largest producer of gold in the world, and they don't tell us. The Bank of Montreal, their analyst, just came out a few months ago and said China has way more gold than they're telling us. They are underreporting it. The IMF just said it. So now they have 1 month of unchanged after 18 months of increases, and they assume that it's over for them. I think it's foolhardy to believe that is the case. Moreover, China isn't the only central bank that is accumulating gold. All of them are. All of these BRICS countries are. India bought more gold in the first quarter of this year, 1.5 times as much as they bought all of last year. And I think the global trend of accumulating gold is undeniable. And if China took 1 month off or 1 month off from reporting, look, go back to Alistair. He's one of my favorite commentators. I'm going to just go to Google here for 1 second, and let's see, how much gold does China own? It's going to be like 3,000-4,000 metric tons. Yeah. Okay, that supposedly China has 2,264 metric tons, but if you ask Alistair will tell you that they have 38,000 metric tons. But the official holdings that they tell us are 2,264 tons, which is a bunch of BS. My point to you is that this article, this Western-derived article saying, "Oh, they're done buying," is a bunch of bullshit. Pardon my French, but it is, and it's in every way. It's just Western nonsense. This is the rhetoric that the West uses to paint a poor picture for the price of gold, and it's more along the lines of it was one of the largest short positions in open interest I've ever seen on COMEX. The commercial banks, who are massively short, are freaking out, tried to drive down the price and hoodwink the managed money into going short, and the commercial banks going long, realizing in this environment being naked short is about as dumb as a mud wall. So I would simply say to you, I don't take that article with even a grain of salt as being legit. And Alistair McLeod would be the first one to say that when he's publicly saying they have close to 40,000 metric tons. Here they have 2,264. That's the official number. So are we supposed to believe the official number when Alistair says don't, Bank of Montreal says don't, the IMF says don't? Everyone has said that they don't tell us what they really own. And they're the largest producers in the world and have been producing uneconomic gold for years based upon our trade imbalance. They didn't care what it cost to pull it out of the ground. They got way more than we supposedly are led to believe. So again, this is the reactionary markets driven by hedge funds and driven by algorithms that trigger, bang, the black box, sell, and it snowballs. It's a bunch of crap, Danny. It truly is. And if anyone is laughing, it's the Chinese.
Yeah. You look at gold as a percent of total global assets, and it makes up, I think, like sub 1%. Commodities across across family offices allocations also make up about 1%. So what happens when all of a sudden all of these people, these family offices, the larger investor class, come to terms with the fact that what we had seen over the course of the last 40, 50 years, a rate, this kind of lowered rate environment, the rules simply don't apply anymore. We're playing under a new paradigm. Will gold retrace back up to 20% plus versus, which is where it was in the 80s and 70s and 60s? Simply, going from 1% to 5% would be monumental as well, right?
Yeah. So Rick Rule often talks about the allocation in gold held from Joe and Jane Sixpack all the way up to the Harvard Endowment Fund in North America being less than 0.5% allocation. And in 1980, it was about 8%. So at least in the United States. So, the mean, the 40-year mean is like 5%, which would be, a tenfold increase. Actually, I think it's more like 2.5% on average over the last 40 years. So even still, it's a fivefold increase. And, when you talk about the people in the consumer being woefully underallocated in gold, yeah, it will present a huge problem. There'll be no gold to find. It'll be impossible to get it. But when we talk about the big money, the smart money, the central banks, their share of global international reserves in gold has jumped to just under 18% in 2023, and most in 27 years. It's doubled since 2016, and it just now passed the euro as the second largest asset held in global central bank reserves. For the first time ever, it passed the euro. So the number one is still the dollar at 48%, but down from 60% in 2017. At the same time, you have the central banks. Their net gold purchases in the first quarter of 2024 were the highest it's ever been, which surpassed the first quarter of 2023. So yeah, you put it together, the big money, the central banks, who not only are the most well-financed, but the most well-informed, are buying at record levels. And actually the most ever in terms of their reserves in contrast to the euro, since the euro's inception. This is a big deal. And what it is, it's the big money in the know always leading the way, front running where things are ultimately going, whereas the public is asleep with less than 0.5% allocation. It's just classic. It's classic misdirection. It's classic big money always in place before the crowd catches on. And so when you realize that the central banks know the playbook, when you realize that the most powerful central bank, the central banker's central bank, the BIS, reclassified it as the world's only other tier one reserve asset, that should tell you all you need to know. And so the people, again, who that 0.5%, the pimple on the elephant's ass, amount to nothing. And if indeed the public wakes up and says, I just need 5% of my assets in gold, that's a tenfold increase in demand. And they're like that, it'll be gone. And all of a sudden, over the past few weeks, silver coins have become really hard to get all of a sudden. And I've been saying since December of last year that I can't understand how they're in such amazing supply and the premiums are so low when the central banks are drying up all of the exchanges. In fact, the Shanghai Gold Exchange, I just read today, let me just find the statistic, which has been bleeding down. And it's something I've talked a lot about lately, the significance of the Shanghai Exchange being bled down, and has a lot to do with the Western central banks, I believe, begging the Chinese for help because they're trapped in the silver market. It has been bled down to an 8.5-year low. There's only 23 million ounces left in the Shanghai exchange. India has imported almost 600 million in the past 2.5 years. There's only 23 million left on the Shanghai exchange, which if you put the Shanghai Gold Exchange and the Shanghai Futures Exchange together, their volume, which has increased 200% in the last 6 months, has now overtaken the COMEX as the second most active trading hub for metals in the world, only behind the LBMA, which came out and said they have their second lowest amount of silver in the 140-year history of it. So silver and gold are disappearing and being gobbled up by the most well-funded and more relevant, well-informed, sophisticated traders on the planet, as the public has just a very minute, if next to nothing, allocation to it. This is exactly how finances work. The people in the know make the moves, get positioned, and then let the information out instead of bad-mouthing it. the way they did and painting it in a negative light about, oh, China's not buying. Bullshit. China's not buying. They are buying. They're just not telling us. And they've been doing it for years and buying it and not telling us. And Google says there's only 2,200 metric tons. And Alistair says, there's 38,000 metric tons. Who's right? Who's wrong? The BIS or the IMF says they're not telling us how much they have. The Bank of Montreal, they're not telling us how much they have. This is what the sophisticated money does. You're dealing with very small markets in comparison to the amount of money that's out there. And the amount of money that's out there, if they were chasing the same asset class, the big sophisticated muckety mucks would get crowded out of their trade. So they paint negative story. They control the media. All of the media is owned by 5 or 6 companies. And you're talking all the media from, all of the internet and well, not the internet. Let's say, well, yeah, the big internet ones, but let's say the radio, TV, newspapers, the traditional forms of media are controlled by a half a dozen companies that are watering down and filtering what we should know. And the biggest money in the world is using misdirection to misdirect the public through price and rhetoric to reposition themselves out of treasuries into commodities and not get crowded out or be in competition with the rest of the world for the limited supply that they're trying to get before things rapidly change. So I don't believe any of it. And I think that gold and silver will go higher than anyone thinks possible once all of this becomes more realized in the mainstream, let alone just the people like me who are out there screaming that this is all not true. And it isn't true. If you dig a little bit and look under the covers, you can see that what is being said really isn't true. The biggest money in the world, I think, has come to a conclusion that assets, commodities are more valuable than currency right now. And I really do believe the gold and silver markets are playing by a different set of rules. And that's going to catch a lot of people off guard when this starts to fully accentuate itself in an environment where there is way more paper contracts issued than the bars backing it, which is distorting the real value, the price discovery, and the real supply demand imbalance. And when that breaks, which I think we've never been closer to it because of the drive to remove counterparty risk, because I don't want to ramble too much. I have a bad habit of doing that, but look at India. Not only did India buy more gold, 1.5 times what they bought all of last year, they brought back 100 metric tons from the Bank of England. They don't want the counterparty risk. Saudi Arabia and Egypt and half a dozen African countries just repatriated all of their gold from the New York Fed, the Bundesbank from Germany, the Dutch National Bank, Bank of the Czech National Bank, the Bank of Turkey, Hungary, Poland, Austria. They all brought their gold back over the last few years from the Bank of England and the New York Fed, and they're all buying it in a very private manner to remove counterparty liability, counterparty risk. So when this goes, it will go in a manner that catches people completely and totally off guard. And so, yeah, I think don't listen to what they're saying. Look at what they're doing, I guess is the easiest way to say it.
100%. What do you say to people who make the claim that gold has already hit an all-time high, silver's up to past $30? What inning are we in this precious metals bull market? What inning are we in this commodities bull market in general? You saw commodities run like 200% from the bottoms in 2020 all the way up until 2022. Some people may write that off as the top, but from what you're saying here, it seems like that was more so a prelude than the actual beginning, than an actual start to anything.
Yeah, I would say that precious metals are two of the only asset classes that haven't been distorted by suppression of interest rates and all the money that's poured into it because of the huge suppression on the LBMA and COMEX. Give you an example of what I mean by the huge suppression and why I said I think that the banks are in trouble in the silver market. The LBMA, the London Bullion Metals Association, admits to trading 200 million ounces of, is it 200 or 20? I believe let me just double check.
Sure.
It's 20 million ounces of gold per day and 2,900,000. Is that right? No, it's not. 290 million ounces of silver per day. And I just want to double check that. I'm pretty sure I'm right on this. Yeah, okay, here it is. And so the LBMA says that they trade 292 million ounces of silver per day, 20 million ounces of gold per day. And yet they have also recently admitted in a survey that was done with the bullion banks that those numbers are understated by a factor of 10 times. Because if I sell you 20 contracts and I buy 10, that's a net 10. Instead of the 30 contracts that I traded, it's only the net. And so they're saying that it's 10 times the amount of contracts traded. So that would mean that they are trading 2,920,000,000 ounces of silver per day in London, which is 3.5 times the global mining supply, 3.5 times per day. That means that they're trading not 20 million ounces, but 200 million ounces of gold per day. The majority of all of these contracts are just promises to deliver in a world where none of these companies stand for delivery. None of these entities stand for delivery until they do, and they have been. And that's why you see all of the exchanges being bled dry. The distortions created by a marketplace that rehypothecates and massively rehypothecates all of the contracts being sold. The COMEX is at 1,700% rehypothecation in silver and less than that in gold. But the point of it is that you have a situation where these markets, these Western markets, have controlled the prices of commodities, and in particular gold and silver, because they represent the antithesis to the Western system, where if gold and silver were flying, it would signal problems inherently within the system. So they would suppress the price of gold and silver by issuing copious amounts of paper contracts that mitigate the rise. You can hold the price down by continually shorting and shorting and shorting and shorting all of these contracts because you're a bullion bank with unlimited money. But the jig is coming up, because when these exchanges were originally founded, and even just back a few years ago, the countries that we're looking at now, namely the ones in the BRICS nations, were not coordinated enough, wealthy enough, sophisticated enough. They didn't have the ability to challenge the West and stand for delivery, but they do now, and they are. Like India importing 600 million ounces of silver in the last 2.5 years. Like India buying and importing 1.5 times what they bought last year in the first quarter of this year. So these countries, these sovereign nations, are standing for delivery, which means if you naked short on these exchanges, you are really putting yourself in the way of a very, very, very dangerous moving train. And you're on the wrong side of it, you go out of business. There was a video that was done by my friend Chris Marcus with a man named Bart Chilton, and I would tell everyone to listen to it, because if you think the things that I'm saying are conspiratorial and not true, jot this down. Bart Chilton, Chilton, Chris Marcus, Arcadia Economics. It's a very good friend of mine. I'm on his show every week. Bart Chilton was the former head of the CFTC, the Commodity Future Trading Commission. And he admitted all this stuff. He said, indeed, this happened, that JP Morgan did this, that they inherited Bear Stearns' short position, that Jamie Dimon was called into the office and said, hey, Jamie, into the office of Hank Paulson and Ben Bernanke, we need you to take this short position that Bear Stearns, silver went from 9 to 21, and this is way underwater. We need your help. And he said, sure, but when added to our position, we're going to be in violation of position limits. And they said, that's okay. We'll give you a period of time to get it under control. And at the end of that period of time, Bart Chilton went into his supervisors and said, not only have they not lowered their positions, they've increased it. They're in violation of our agreement. They're in violation of antitrust law. They need to be prosecuted. He publicly says he went into his superiors and was told to back down. It was a political decision. Now, he died a week later, not saying there's a correlation, but he admitted it on Chris's show and then died and said all of these things, that the bullion banks were manipulating the markets, were in violation of antitrust, and need to be prosecuted. So when you talk about these banks holding down the price of gold and silver, there are reasons behind it. The reason with gold is that it represents the canary in the mine shaft, the inverse relationship between real interest rates and the price of gold. And if you maintain low interest rate environment for 2 decades, to make your economy and your markets seem stronger than they are, to create an illusion of prosperity in your 401k and your house price and all of these things, to turn your home equity into an ATM where you can pull money out and go on trips, pay off debt, buy a boat, do whatever the hell you want. That has consequences. And those consequences are what we are seeing right now, where the distortions that were created through massive suppression in the markets are coming home to roost in an environment where these countries are now wealthy enough, sophisticated enough, and understand what's going on, where they can just play the same game, short the price on COMEX and stand for delivery, and buy it at subsidized prices. But at the same time, by standing for delivery, they are pulling the metal off of the exchanges. These exchanges were never established and set up for delivery mechanisms. You can do it to give these, they have to have it to give them legitimacy, but no one ever did it. Less than 1% stood for delivery. Now, all of a sudden, we see exchanges being bled dry by these countries. So prices will go higher than anyone thinks possible. When you look at silver at $30, still 60% of its all-time high in 2011 and in 1980 of $50. Ask yourself, why would a half a dozen commercial banks have the largest short position in silver of any commodity traded on COMEX? It's a concentrated short position. There's nothing even close to it. And I think it has to do with silver's role in the military industrial complex, in its need for the building of high-tech weaponry, namely the missiles and aerospace, that the Silver Institute conveniently has omitted from their supply-demand fundamentals. Yet I have a friend at the Department of Defense who tells me, indeed, he helped design the Patriot missile and said there's between 13 and 14 kilograms in the tip of every Tomahawk cruise missile. Excuse me, Tomahawk, not Patriot. He helped design it. Told me this 3 times. He's told me this in person. Google it. You'll see something similar to that. But it's omitted in the supply-demand fundamentals numbers for the Silver Institute. And if you believe that the military-industrial complex is as powerful or more so than Washington, then understand this is why they hold it down. And they hold down the price of gold because it's really the opposite of the bond market. It is the opposite of our system. And these distortions, these manipulations will all end and end badly. And I think the countries that are now uniting against the West understand you don't have to fire missiles to beat the West. You can just massively stand for delivery and drain the exchanges of all their metals and blow up the bullion banks like JP Morgan, like Bank of America, like Deutsche Bank, like Standard Chartered, like HSBC. And isn't it ironic that HSBC, Deutsche Bank, Standard Chartered, and JP Morgan all showed up for 4 weeks in a row, starting the second week in March? You go to the Shanghai Gold Exchange website, you'll see second week, third week, fourth week, and first week in April. And you cannot export gold out of China, but you can silver. And take a look at the vaults of the Shanghai Metals Exchange since the second week in March when they showed up. It's falling straight down to its lowest level in a very long time. And I believe it's exactly that they're trapped, that they've issued so much paper against these contracts, and these countries are standing for delivery. They're trapped. And if they can't deliver, a bank like JP Morgan, what would happen if they defaulted on, billions of dollars worth of silver? Gold and silver aren't going higher. It's the dollar that's losing value globally. And as the dollar loses confidence and loses value, the one measurement of all of this, the barometer of all of it, is gold and silver, which I think will become higher in value than people think possible in the face of a falling dollar, in the face of all the Western currencies, which are losing confidence in a world where things can be completely and totally weaponized against you if you're not on the same ideological train of thought the way the West is. We haven't seen anything yet. And but again, I want to make it very clear, Danny, that I don't tell people to buy gold and silver to become wealthy. I tell them to buy it because it is wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, and through all of this, in a world that is very digital and very financial instrument driven, that the most influential, well-funded, well-informed traders in the world are buying it at a level no one's ever seen. And that's the central banks who know the playbook. So yeah, we may be at all-time highs. But why don't people ask that about the Dow Jones when it broke through 20 and then 25 and then 30 and 35? Why don't people ask that about other asset classes that continue to reach new highs in the face of a world that has pumped, trillions of dollars into the system and suppressed interest rates? It just so happens the only asset classes that they didn't let run were the commodities, because they represent the canary in the mine shaft. And that to me is something people need to ponder. To me, gold and silver represent the value of a generation. And if they were really to be priced against their inflation adjusted numbers, gold and silver would be way higher than they are right now. So no, I'm not concerned about gold being near its all-time high, and silver 60% of its all-time high, when countries are importing it the way that they are, and the exchanges are being bled dry. No, it'll go higher than anyone thinks possible before it's all said and done.
Yeah, I mean, I've got to give it to you, Andy. You just dumped an entire hard drive worth of data on all of us. This is fantastic. A great display of knowledge there. So what I've got to give you as well is, your deals in Miles Franklin. I'm not just blowing smoke up your what, but I do have family as of this past week who checked out your price guides after listening to the videos that we did last week. So
well, there might be a company or two that can beat my price. Yeah. But if you ask for our price list at info@milesfranklin.com and we'll send that to you, it'll be as good or better than anywhere in the country. There might be one, but look, we've done this for 34 years without a customer complaint. We're licensed and we're bonded, and we're going to deliver, and we're going to be there when you need us. And we are going to give your listeners the type of service that you would demand and that they would want. And so our price will be as good as 99% of the people out there, or better than 99%. And yet we will make sure that your listeners don't represent the first complaint that we've ever had. We take that very, very seriously. And I think relationships are important, man, more important than you think, maybe more so than people realize until there's a problem. And then when there's a problem, we are very adept at solving those problems, accepting responsibility and making it right. And maybe that's why we haven't had a complaint. That's not to say we haven't made mistakes. We have, but we make it right. We stand behind it. We're accessible. And I appreciate that very much. I appreciate the kind words. I take it very seriously, and it's wonderful to have the ability to come here and talk to you and your listeners. And I look forward to doing it on a regular basis, because I really do believe that the next few months, several weeks and months leading up to the election, will be the craziest of our lifetime. And there are a lot of things that are trigger points for when things could really start to get nuts. So having that relationship, having the ability to get on the phone and talk to someone quickly is something that I think will take on a greater level of significance. So thank you for the kind words. And remember, it's not the prices on our website. It's the info@Miles Franklin, the price list that were reserved for your listeners. That will be better than what they can find basically 99% of the companies in America. So, and on very large orders, there's room to negotiate there as well. So keep that in mind too.
Excellent. Well, to take advantage of that offer, guys, email info@milesfranklin.com and write CapitalCosm sent me in the subject line for special pricing.
Correct.
So
absolutely.
Great. Andy, any closing thoughts before you wrap things up?
No, I mean, look, my closing thoughts are to trust your gut. As trite as that sounds, I mean that. We're being misled. Like the Chinese article is a prime example. That's misleading, and it's really not true. Trust your gut, listen to your inner voice, and pay yourself first. I think things are going to start to get really, really crazy. And I will tell you, honest to God, in the past several days, the availability of silver coins industry-wide is beginning to dry up. And I'm dead serious. You're going to start to see premiums rise. And it's actually kind of concerning to me, because there's been no warning whatsoever. I guess we'll see how it plays out, but there is an awakening, and it's a gradual awakening by the people in this country. And you said something interesting earlier, less than 0.5%. If that just goes to 5%, in a matter of 24 hours, there will be virtually nothing for anyone to buy. And in an environment or an industry where, other than the US Mint and the Royal Canadian Mint, everything else in terms of sovereign mints, South Africa, Australia, Austria, the United Kingdom, they're all across the Atlantic Ocean. And the Chinese mint and the Mexican mint amount to nothing. They don't really send hardly anything at all. And so you're dealing with an environment where, if all of a sudden things dry up, this is why they say there's no bull market like a gold bull market, because it speaks to people's concern. And the higher the price goes, or the crazier the world gets, only reinforces that concern. And so people are not really going to be motivated at a profit, unless it's a really big profit, to sell and go back into dollars and be back in the same position they were to begin with. What it is reinforcement. Whereas other investments, the higher the price goes, you're ready maybe to take some off the top and reallocate it into other traditional assets, or do something with that profit. Here it's different. And so the secondary market dries up at the same time that the mints run out of product. And all of a sudden you're left with a situation where getting product at a reasonable price in any reasonable time frame becomes an issue. Now, I've seen this a half a dozen times more in my career, and the environment was bear market at best in the 90s and the early part of the 2000s, when no one was buying it and the mints run out of product. The mints are the model of inefficiency. You add into it some sort of an issue, some sort of an event, some sort of a realization collectively that, hey, my goodness, having all my money in the banks or in dollars or in traditional assets is not where I want to be. I need something tangible in my possession. You need to be proactive. And I mean that. I wish there was a way I could convey that without sounding like I'm talking my book. I'm not talking my book. And after all of these interviews I've done over 4 years, I hope people understand that I'm being as genuine and sincere as I can. Fact check me on everything. And I guess we'll see how it all plays out. But I do think that will be something that we will see happen over the next few months. And that is, inventories disappear by companies like mine in the industry as people, whether it be a bank failure, whether it be some big news out of the BRICS, whether it be a big electoral news, or something with the 17 million people that have entered this country illegally. They just busted one here in Philadelphia and New York and California, I believe, yesterday. Some sort of a threat that was stopped. But if 1% of 17 million want to do bad things to this country, that's 170,000 people. And so the numbers, if 1/10 of 1%, that's 17,000. Do the math. The numbers are just telling you that there are people who do not like the United States who are in this country already. And hopefully we don't see something that wakes people up to the fact that they need to start to take accountability for their assets, to remove counterparty liability. And if you don't believe me about counterparty liability, I suggest you all go to YouTube and watch The Great Taking by David Rogers Webb, or read the book. It's short, but The Great Taking by David Rogers Webb, if that doesn't freak you out to a level that, you're not really accustomed to feeling that level of discomfort, I'd be shocked. Think outside the box, trust your gut, pay yourself first. Take a look at The Great Taking by David Rogers Webb, and jot down some questions and send them in to info@milesfranklin, or better yet, Danny, you and I could do a live stream and talk to your people live. And I'd love to do that, man, and get these questions answered, because I think we are entering a period of time unlike any other. And it's only going to get crazier as October with the BRICS meeting in Russia, and November with the election, God willing, happens. So I'll think about some closing statements next time we talk in the next week or so, a little bit more poignant rather than general. But, as a father of 3 kids, I've never been more concerned about what's coming. And let this be your last thought. 1 trillion seconds ago was 31,688 years ago. And we have nearly 200 trillion in funded and unfunded liabilities. So this is becoming real, and I think will only get more real as the days and weeks in the future here, in the coming near future, start to get upon us. So We will see, as the Chinese curse says, may you live in interesting times. They're sure not dull. I would say they're about as interesting as they get. So buckle up. I appreciate you having me, brother, and I'll look forward to picking up where we left off, hopefully next week or the week after. Just color me interested in coming back and riding shotgun with you, see what's happened since we last talked.
Yeah, let's do it. You guys be on the lookout for a live stream. If not a live stream, we'll do another one of these next week. We'll figure something out for next week. So be on the lookout for that. Follow me on X at Capital Cosm. I'll post any updates on there, as well as here on YouTube. But if you enjoyed this content, be sure to give us a like, comment down below. What do you think? Are we on the edge? Are we on the precipice of a major happening soon? Also, subscribe to the channel. I know a lot of you guys came through last interview. About 85% of you who watched the last interview with Andy and I, 85% of you are not subscribed. So if you're enjoying this series of interviews, you're going to want to subscribe to the channel so you don't miss another video. So be sure to hit that subscribe button. And also, it helps the channel out. Every little bit helps. And with that said, you guys, be sure to email info@milesfranklin.com and write Capital Cosm Set Me in the header, in the subject line, to get their special pricing list. And I will see you in the next episode. Bye, all.